Hey, Dustin.
Hey, hey,
We're live.
we are live. Look at that.
Episode 23, is it?
23. It's a great
It's a good
number.
number. Yeah.
Yeah, it's
It's a
great.
prime number.
I have some good news and bad news.
Okay.
What do you want to hear first?
Let's start with the bad news.
I don't know if you could
Oh,
tell, I'm a little sick.
are you?
I don't know. Yeah, can you hear it in my voice at all or no?
Now that you mentioned it just a little bit, but I wasn't hearing
Yeah.
it before you mentioned it.
So I apologize in advance if I have like a coughing attack in the middle of the podcast.
Okay. What's the
Okay.
good news?
The good news, it's very exciting. I bought a Rivian, and I'm not
You
talking about the
did?
stock.
A vehicle.
I got
What?
I got an R1T.
What? I'm blown away. And this is the first time you tell me. How long have you had it?
Do you wanna see it?
Yes. Oh, okay.
Look at this. Look at this R1T in
All right, all
green.
right. That's
For
that's
anyone
kinda
listening, I'm
cool. You
holding
got
up
me
a
all excited.
model R1T, and it is
You got me all
beautiful.
excited. It is a beautiful vehicle.
It doesn't run on gas. It also doesn't run on electric.
It also doesn't run, it's a model.
It doesn't run at all.
That's funny. Um, but okay, so if you were buying a Rivian, which Rivian would you buy?
I mean, I would wait for the R2 if I was, buying.
Yeah.
But
Okay.
honestly, I really like, um, I think it's called the R3X.
Yeah,
Like,
or
that's like the
R3, and then
there's
the
an
X is sort of
R3.
like a
Yeah, there's an R3 and then there's the R3X. I really like the R3X in particular, but
so what about the X makes it exciting for you in terms of
the look of it.
versus the R3? Because R3, the looks of it is similar. The X has just the, like, cooler looking seats and stuff,
And
right?
it
Is
has,
that
like, the orange, mirrors
the
on the
orange
sides.
highlights? Okay.
But I'm not, like, seriously considering buying a Rivian at the moment. So,
Yeah. But also
I
that vehicle is not even up for, reservations. It's not coming out for
correct.
at least another, what, until 2028 and beyond, maybe
Correct.
2029.
If I was really buying a car, like, not right now, but, like, in the near future, I mean, there's a good chance I would end up with the regular R3, not the R3X, but in
Okay.
my mind, I like the R3X the most.
That's funny. Should we
Yeah,
just talk about Rivian for a little bit? Because the stock's down quite a bit from its recent
let's do it.
highs. What are your thoughts about that? I know you're also a Rivian shareholder because I get
Yes.
questions all the time as, am I adding more? Am I selling? Did I lose interest? And I'm like, no, you can see my portfolio. I still have all my shares. I haven't added any and I haven't sold any. So what
Yeah,
are
and
your thoughts on this?
because of my portfolio rebalance, I bought more when it was at $20.72 a share, and now it's at
Okay.
$16.47 a share. So, I'm definitely feeling it, but
Okay.
not concerned. It's interesting because we said, and we've talked about it time and time again, that the, uh, AI autonomy event was going to there was a good chance it was going to be a sell the news event, and then, like, day of, it kinda sold off, and then the next day, it totally rebounded,
Right.
and it seems like now a little bit longer term, the hype has died down, and to
A little bit.
me, it's not surprising until they start, either shipping R2s or shipping some of this autonomous technology to their existing vehicles.
That's
Um,
exactly right, and yeah, they need to be making progress on. I think investors, want to see that progress of uh, lower losses on a quarterly basis, and hitting the milestones of delivering R2 and delivering on point-to-point self-driving capabilities and those things. And it's a long-term investment, and I've been saying this, that there might be lots of buying opportunity or lots of dips, if you will. Buying opportunities is another word for turmoil. In that, until the company is profitable, there will be a lot of naysayers and legitimate concerns about the company be getting to profitability. So those are the reasons why this doesn't surprise me in any significant way. They're about to have their Q4 earnings results, which is going to show pretty significant losses again. Well, obviously, because it's not like they have had significant changes in volume and so on, and that's not going to happen until R2 gets to scale, which is not going to happen until next year. So all of these things play a role in 2026 being a fairly tumultuous time for Rivian. Now, things that could change it in a positive direction is if some major investor and or investors become like, okay, this is a bargain at this price point, and we want to invest, or we want to own a chunk of Rivian in the same way that Amazon owns a chunk of Rivian, for example, or maybe they try to buy out Rivian. Those are all possibilities that could change things up in the short term. But other than that, it's kind of like a long-term play where this is not a stock that's going to move. Well, I would not speculate that this stock would move in a huge or significant way. Let's say double or triple in 2026, for example.
Yeah, I agree with that. I mean, unless if there's the chance that something happens for the company, like you were just mentioning, or if the market goes absolutely crazy, like let's say the Fed
Right.
starts cutting rates dramatically, in the second half of this year, and the market's just ripping, that could also just cause Rivian to go up with everything else.
Yeah, that is very true. That is very true. And because of its relatively small market cap, I think it's now under 20 billion, if I'm not mistaken.
It's right at 20 billion.
Is it 20? Again, whale investors that might decide to invest $1 billion or $2 billion or whatever could actually make a pretty huge impact on the stock. And whale investors would be investors similar to like a Bill Atkins or whatever, who manage a why am I drawing a blank on the type of fund?
Like hedge fund?
Hedge fund, thank you. Like a hedge fund investor or even an individual multi-billionaire. But anyway, speaking of companies that do have 2 or 3x potential in 1 year or in 2026, Micron has been on a rip, right? Like they're
Absolutely.
up 35% already year to date, which is incredible. What are your thoughts on Micron? Are you like, I don't think you jumped into Micron, right?
I did not, at least not yet.
Okay.
I really like your POV on it. I don't know if they're going to hit the $900 per share or not that we talked about last episode, but I understand your optimism and I agree with it. I just have a hard time buying at all-time highs, and
Yeah.
that could bite me, and that's okay. There's always going to be another opportunity. But I'm just kind of watching it right now, and that might be all I am, doing. My
Yeah.
question for you is, it continuously hitting new all-time highs, but your point of view is relative to other companies like Micron, its price is actually being suppressed.
Right.
And my question is, why do you think Micron's price is suppressed?
Yeah. Great question. I'll actually answer that question in just a minute, but let me first touch on something else, which is the reason why I don't mind buying Micron at an all-time high.
Sure.
Because generally speaking, there's 2 reasons why stocks go up. One is because they have performance. Their financials are actually delivering higher and higher revenues and higher profits. Um, and the other is just because of hype, because the market gets excited about a particular segment or industry, or companies, for example, in nuclear space right now have a lot of hype and a lot of excitement going for them because the anticipation that they will have lots of revenue and profits in the future is there, and therefore the stocks have just done tremendously well over the past year, right? So those are the 2 reasons. In Micron's case, the answer as to why it's hitting all-time highs is because the revenues and profits have just skyrocketed. So if you compare Q2 2025, which is the current quarter that we were in, Q2 is Q2 2026 for Micron. Q2 2025, they had $8 billion in revenue and $1.56 per share of earnings. So 8 billion is anticipated to go up to 18 billion, 125% year over year increase, which is just unbelievable. And then the $1.56 is expected to go to over $8 per share, $8.10 per share, which is over a 400% increase in profits. And when the profits of a company have gone up 4 times, you would expect that the value of the company should have also gone up 4 times, and that like that just about checks out. So, and it might even be less than 4 times in Micron's case if you compare it to end of Q2 2025 numbers. So Micron is going up as a result of revenue and profit increases, which is actually a refreshing change as opposed to just hype or just excitement or people getting super excited about a company. Now, as far as why it's getting kind of suppressed for future price earnings, the end of 2026, if the price didn't move, it would have a price earnings ratio of 11 or something like that based on current price point and what's expected for them to have in 2026 of profits. But the reason it's getting suppressed is because the argument of memory is cyclical or has been cyclical traditionally. And that every single time, every day, I see that argument on X, especially about Micron. And there's 2 issues that I have with that argument. One is everybody who thinks that memory is cyclical doesn't necessarily think that about NVIDIA or GPUs or whatever, even though NVIDIA basically went through multiple cycles with gaming becoming sort of like what drives them. And then that started to die down a little bit. Then crypto came about and started to drive them. And then that started to die down a little bit. And then AI started driving them. Well, if you looked at NVIDIA historically, it was cyclical as well. And then now it's on this like super up curve. There's a chance that the AI demand for NVIDIA chips will also die down, but no one thinks of NVIDIA as a cyclical company. But they still do for Micron for some reason. So that is one argument, is the cyclical. And then when you ask, okay, when is the cycle going to end? The only time they can sort of like point to is like right about now or in the past couple of quarters, because the cycles last roughly 4 or 5 years, and we should be at the end of that cycle. And all indications are that 2026 is already sold out, and this cycle is going to at least continue into 2027 and possibly beyond. The only people who have good visibility on the demand of memory chips is people who are in the management teams of these companies, whether it's Micron or Samsung or SK Hynix. It's just these 3 companies that are making these memory chips, and they're all investing in more fabs that are going to come online in 2027 and 2028. So unless they're just completely reading the future of this market wrong, it seems like there's going to continue to be a lot of demand for at least the next 2-3 years and possibly beyond. If you take things like what Mark Zuckerberg says about the number of gigawatts of data center space data centers that they want to bring online, or what Elon Musk says about the number of gigawatts or even terawatts of data centers that they want to bring online. A terawatt would be 1,000 times bigger than 1 gigawatt data center, which is just mind-blowingly enormous. If these are the sort of projections of the future over the next 10, 15, 20 years, this cycle might not end anytime soon. So
or the
you sort of take
cyclical
that
pattern might just be over, potentially.
That's right. It might be over, at least for in the same way that not everything is a cycle, but like things do taper off at some point. You would imagine,
right?
But if AI demand continues and if we start getting lots of productivity gain as a result of it, it could continue for a long time before it tapers down.
And they just broke ground on a new facility in New York, right?
That's right. That's right. They that facility, I think, is $100 billion facility that they just broke ground on. So again, unless management is extremely dumb and is like miscalculating, and they don't think that the cycle is ending anytime soon. Otherwise, they would not be making these investments. So um, we basically have two potential people we can bet on: the management who has some visibility, or X users who speculate that the memory is cyclical, or X investors who are posting on X, I should say.
Right.
So yeah, I'm going with it doesn't appear to be cyclical, at least in the short term.
And what
And
about
short meaning at least 1 year plus, maybe 2-3 years of visibility.
Rocket Lab? Because Rocket Lab is, also down, kind of like Rivian, not as much, but kind of like Rivian. And I saw that you trimmed again earlier this week.
Yeah. So when did I trim? I trimmed at 98.07, and now it's at 87.82. Every time I've trimmed in the short term, it's gone down, and it sort of like feels good that, okay, I took some chips off the table. But in the long term, it just comes back and makes all new all-time highs. And uh, I wouldn't be surprised if it does that again. Where they're probably going to have a great quarter when they report the current quarter that we're in. They're likely also going to have updates on Neutron and whether or not that's on track. And what's interesting about Rocket Lab is the bulk of their business is actually from building satellites and other technologies, or like satellite technologies, basically. And that business is growing super fast, even faster than their launch business. So, what they might project in terms of the next quarter's revenue, or beyond, and give us some visibility on that, is that the satellite business might actually be, growing in such a way that there's even more excitement to be had there, as opposed to just a launch business. So, you know, Rocket Lab is one of those companies that I want to continue to own for many years, because as you noted in the last episode, I did speculate that this is probably one of the only companies that I know of. 2 years ago, I said this, that has 100x potential on the market, and they're already up 20 times since that speculation. Now, I didn't think it would happen so quickly, but the 10-year sort of time frame is my time frame on Rocket Lab, and I want to still continue to own them 10 years from now. Now, I don't necessarily want to continue to own every share that I have today, because I think de-risking is important just in case something happens. But yeah, it is an exciting company.
And what are the application, like, for someone who's not into space or doesn't really know the area, this area that well, what are the applications of, like, how a company like this can monetize, I guess, their satellites, for instance?
Yeah, so the perfect example, like, the pathway has already been paved by another Elon Musk company, which is SpaceX, and they have their own launch vehicles, obviously. And anytime uh, they want to send satellites up into orbit for themselves, it costs them a lot less. And they have SpaceX has built Starlink, which is the global internet service provider that can provide internet anywhere in the world. I actually use it. It's a fantastic service, and there needs to be competition for that. Amazon is a company that's getting into this business, but the speculation is that Rocket Lab will also likely get into this business. They've started to accumulate some communication technologies. Um, Peter Beck has kind of implied that being an end-to-end space company means that you could build your own satellites, put them into orbit yourself at a cost-effective rate, and no one else can compete in the same way. And he's referenced Starlink as an example of that. So he's implying that they might go in that direction, which is super exciting. If they do provide a alternative to Starlink that's viable and um, does well, let's say 5 years from now, this is definitely a business that could easily become a tens of billions of dollars of revenue relatively quickly, in the same way that Starlink has. Starlink already has over 10 billion of revenue and growing super fast.
My last question on your portfolio, then we'll move on. Meta, I think, is down roughly 8% year to date. What are your thoughts on them?
Yeah, I don't know what the reason that Meta is down is, and I've been buying, as you know. So
Yeah.
Meta has been uh, going down, and like my personal view on it is that the market is miscalculating Meta in the same way it was miscalculating Google early last year. Um, so this makes it a great buying opportunity in my opinion, and I think there's going to be an upside surprise as to uh, when they report their earnings and when they start to release products that are around what they've been working on the AI front, which we haven't seen yet. So the combination of those two things, I think, makes Meta a fantastic potential opportunity right now, and that's why I've been buying them. In fact, I might buy more. It's kind of exciting that it's going down. It just seems like a no-brainer to me.
So I want to move on to the New York Stock Exchange had a big announcement. I think it was earlier this week, where they announced they're going to start developing a tokenized securities platform where they're going to bring their securities to the blockchain. So what that means in English is there are three core benefits, and some might think these aren't necessarily benefits, but we'll go through them. There will be 24/7 trading, so it's not the market
Nice.
doesn't close at 4 if you're on the East Coast. Uh, there will be fractional share trading, which already exists at the brokerage level, but this is moving it to the exchange level.
Okay.
And then there will be immediate settlement of your tokenized capital.
Which is pretty. Those are all fantastic things, by the way. It's kind of surprising we don't already have these things in place. The immediate settlement.
Would you want 24/7 trading?
Well, the the fact that the markets close is kind of nice. That like you don't have to like think about it from that perspective. So we've gotten conditioned into this sort of Eastern time zone of 9:30 a.m. to 4 p.m. Eastern or whatever it is. Like, but it's so arbitrary. There's no reason for it,
Oh
right?
yeah,
And I think 24/7 would make sense, and Robinhood has kind of introduced it to some degree. It just makes sense for it to be at the exchange level. Same thing with fractional. More importantly, the one thing that you mentioned that I'm more excited about than anything is the immediate settlement, which used to be 2 days for transactions to settle, and then now I think they've sped it up to 1 day transaction settlement. But even that is like so slow in a digital world where it
absolutely.
doesn't make
Makes no
sense
sense.
why. Yeah, it doesn't make sense. So I like all of those things. I think it might even help solve some of the problems that we've had historically around short sellers, being able to borrow the same shares multiple times. But because transactions don't settle for a couple of days, every brokerage thinks that they have more shares than they actually have or whatever. So there's been opportunities to sell more than 100%, as we saw in the GameStop fiasco. Um, More than 100% of the shares were shorted, so which
Yeah.
should be impossible, technically speaking. So, I think it might help solve some of those problems. When are they going to have all of these things in place?
I'm not sure if they announced a ETA or not. I didn't see one when I read the article.
Okay.
Um, but it's something that they're actively working on. I agree. The settlement piece, I think, is the most exciting.
Yeah.
Because right now, if you want immediate settlement, you kind of have to turn on margin just so then you could
Right.
immediately trade what you just sold, and then it settles still after a day or two. Do you use fractional shares or do you buy full shares
I only
currently?
buy full shares just because it doesn't make sense for my size portfolio. But I do encourage people who are investing 1,000, 5,000, $10,000 to buy fractional. Yeah, for sure.
I buy full shares only because my OCD would not allow me to buy fractional shares. But
What
it
about
told
you? You do fractional for Bitcoin, right?
I
Or
do
Ethereum,
because you have
probably.
to, because you have
Yeah,
to.
yeah.
But that's the exception, not the rule. Um,
It's funny. You know what's funny is that in order to avoid that, or like sometimes the price per share of a stock has such a huge psychological effect on people. Like when I started getting into Micron, someone commented to me that isn't the stock too expensive? And because it was $300 per share, and I was like, based on what? They're like, because it's $300 per share. I'm like, well, yeah, but you're not referencing how many shares they have, or that the market cap is expensive, or like uh, just because it's $300 per share does not make it expensive. You have to like take other things into consideration, like how many shares do they have,
right.
you
A
know.
lot of people make that
So
mistake.
yeah, I think that not realizing that basically performance is usually percent based anyway, irrespective of the stock price. It just doesn't make sense to take stock price too much into consideration. So, um, Warren Buffett famously never wanted to do a stock split for Berkshire Hathaway, and I think the stock. I don't know what the current price is, but it went all the way into the hundreds of thousands of dollars per share, right?
Yeah, I think so.
So you could have, if you could have bought it at $1,000 per share, it would have still over 100x for you, you know. But um, but anyway,
The last note I want to make on this from a investing the investing side of things in regards to like investing in a blockchain, right? Ethereum versus like Solana. They didn't announce which blockchain they'll be using or which blockchains they'll be using, if multiple. So I think that's going to be a potentially big deal, but we will see.
yeah.
Okay, let's move on to Netflix. They had their earnings yesterday. And it was a beat on both revenue and EPS. Revenue beat by 0.68% and EPS beat by 1.82%. But they actually missed on their guidance. Their guidance. Oh, this was before the split. That was yeah. So they missed on their guidance. But they did have positive guidance for next quarter. So
Interesting. Okay. Yeah, it doesn't make sense why their stock price would have gone down. They also based on the results, right? It makes sense to me that their stock price would go down because they've started to get a little overvalued, which is why I had sold my shares. And after I sold my shares, I watched it run up. I think my last shares I sold in the 800s before the 10-for-1 stock split, so maybe in the 80s, maybe in the 90s. I don't remember the exact price. And of course, it went all the way to 120, 100 and mid 120s. Um, but like as often happens, things go, the pendulum swings one way, then swings back down the other way. um, in Netflix's case, it might just be, it might not even be like corrected yet. It's about the right price point for a company that size that's growing at what's this growth numbers look like right now?
uh,
Or-
revenue grew 15.8% and EPS grew 27%.
Okay, and it has a PE of 33.
Yeah,
So, it's basically those numbers right there are identical to, let's say, a Google. Similar growth rate, similar PE, um, despite having been down, despite the Netflix's stock being down as much as it has been, down to 85 from like
which
one
is funny because it's basically at
highs of
its
26.
50. It's basically at its 52-week all-time
Low,
low. Well, not
or
all-time low,
52 week.
52-week low.
Yeah. Um, so that that goes to show that like basic at this price it's similarly priced to Google. So uh, it's not super exciting. It's not growing way faster than Google. It's.
Right.
I would like I have passed on it because for me, Meta is even more exciting than both of them, both Google and Netflix, growing faster, lower PE, and then the AI investments are all gravy. They're
Right.
not even being counted.
And not that this necessarily matters, but from a narrative perspective, like FANG is not a thing anymore, where it was a part of that like core group. It's now the Mag 7, which it's not included. So
Wait, Netflix is not part of Max 7?
no,
Which okay, what are the Max 7?
now you're
Obviously,
gonna test
Apple,
me.
yeah,
Apple, Google,
Microsoft,
Microsoft, Tesla,
Amazon, Tesla,
Amazon, Nvidia,
Nvidia.
and which one am I
I thought
missing?
it's Netflix,
No,
right?
I don't think so.
Maybe we gotta look this
Gotta
up.
Google it.
Mag 7 companies. Um,
Which one are we missing?
Tesla, Meta, Nvidia, 1, 2, 3, 4, 5, 6. Oh, I guess Apple, Microsoft, Amazon. We said all of them. That is 7.
Oh, so we just don't know how to
We just
count?
don't know. Yeah, exactly.
Okay, cool.
So Apple, Microsoft, Amazon, Google, Tesla, Meta, Nvidia. That is 7.
Okay.
Wow. That's
And this is a prime
yeah.
example why
Why you should not
everything we
listen.
say is not investment advice.
That's so
We
funny.
somewhat know what we're doing, but not fully.
Yeah,
But yeah,
we
so
know how to.
anyway, they're not a part of that core group anymore. They haven't been for a while. So to me, I believe in that like larger narrative. So it just makes them
Right.
slightly less attractive, even though that has
Yeah.
nothing to do with their actual business or metrics or anything. Um, the other piece I wanted to
Well,
hit on is
yeah.
they just updated their deal with Warner Brothers, where
Oh, yeah.
originally they and Warner Brothers accepted their offer. And the original deal was it was going to be mostly cash, and then I think for it was maybe like $27.50 a share, something along those lines. But $4.50 of that was going to be of Netflix stock.
Stock.
And they changed their offer to be all cash.
Yep.
Why they did this? So I think there's two reasons. One, without having that stock component, it dramatically reduces the paperwork needed to close the deal, and they could actually close this deal a lot faster.
Mm.
Like optimistically, they can close it within the next few months.
Okay.
The other piece is Paramount has put a lot of pressure on Warner Brothers and Warner Brothers shareholders for their hostile takeover bid, and they've actually taken Warner Brothers to court over this.
Mm.
Um, and the courts, I don't think are buying any of their arguments. Netflix definitely won the bidding war fair and square.
Okay.
Um, but this does change my POV where originally when we talked about this, I was leaning towards this deal not going through. The fact that Paramount is being so litigious makes me believe that they think the deal's gonna go through,
Otherwise, they
and
would just wait it out.
exactly.
Yeah.
So, I think there's a good chance that this actually happens, and
Hmm.
Netflix is just making the path even easier now with it being all cash.
Let me ask you something. Do you think that Netflix could grow a lot faster if it had access to all this HBO content and other things in this deal?
It's hard to say, I don't know. I mean, it's Netflix has already had a ton of growth, and I think that's part of the problem is the growth
Right.
is gonna start to slow down as you kinda capture the entire market.
Right.
So, I understand why they're doing this. It also will create a new revenue stream. I mean, like, b Warner Brothers had a killer year in 2025. They made a ton from their movies. They had some of the like, I think Minecraft was 2025. Like,
Mm.
they there's a lot of money that Netflix is leaving on the table. So I don't know if it's necessarily going to increase their subscriber base, but it should increase their revenue dramatically, especially if they could really focus the Warner Brothers studio.
Very cool. Now, moving on to another subject, I know you've been making some trades. What are the trades you've been making?
Oh yeah.
You shuffled some investment. Yeah, a couple of your investments are already up pretty significantly this year, right?
Just a little bit. So you guys might remember I invested in EOS and Iren at the beginning of the year, and year to date, EOS is
Look at
up
that.
for like 53%.
I thought
Iren
my
is up.
Micron being up 35% was good,
You
but
know, it's all positive as long as it
it's
goes
all
up.
relative.
And what is this? Iren is up 41.5%. And I'm still in the accumulation discovery phase, but I did buy more today because they were both down like, I don't know, like 7%, 5%, 7% at one point. So and I wasn't planning on buying more today, but I bought more Iron at $50.37, and now it's at $53.49. And EOS I bought at $15.78, and now it's at $17.54. And that was just a couple hours ago. I will say that Iron, I don't think there hasn't been any like major updates. With EOS, last week they had this presentation where they announced their like latest version of their battery product called Intensity.
Okay.
And a lot of, and again, I'm still new to these companies, so like I don't really know fully what's going on. I'm just kind of watching, but a lot
Right.
of their investors were like hyping up the event, similar to how we were hyping up Autonomy Day for Rivian,
Okay.
thinking it was going to be some like amazing announcement. They were going to announce some like big deals with other companies, whatever, and they ended up pretty much announcing everything that we already knew. Like
Okay.
all the information was
About the company.
pretty much well. So the stock took a bit of a tumble, I think, definitely after the event, and then similar to Rivian, it just kind of recovered immediately. But my POV on it, and again, this is probably because I'm a newer investor in the company, is I actually liked the event because they visually demonstrated the actual batteries. They're making them smaller. They're still big. They're like a big cube, like
Okay.
almost a pallet size, like if you were at Costco and you were thinking of like, them moving around stuff with the forklifts. So
Right,
they're
right.
they're big batteries, but they used to be container sized.
Okay. So relative to that, it's a lot smaller.
Y
Okay.
Right. So it's just easier to maneuver, install. You don't need, like, crazy, like, unique equipment. You just need a forklift, um, to move it around. But I really liked seeing the visual aspect, and they had some, like, really interesting statistics on it where it it could store up to 1 gigawatt hour of energy per acre. And they're
Oh,
shooting
wow.
for down the road, I think they're shooting for 4 gigawatt hours, but right now this could support 1 gigawatt hour. Because you're
Impressive.
able to stack these batteries on top of each other, which you can't do with lithium ion. So I really liked what I heard, even though the market didn't necessarily. And like my whole, I didn't even know the event was happening until I got a notification on Earnings Hub. So,
Very
um,
cool.
but yeah, so still learning, but
Love it.
yeah.
Do we
Um,
have anything else to chat about, or should we go on to listener questions?
I just have one more question because this was a listener question from a couple episodes ago that we never got to. They wanted to know how or if you use stop losses at all for your positions.
Oh, yeah, never. The reason I buy a company is because I think that the price of the company is a good price. And we got to step back in order for me to accurately answer this question. One of the things that is super important to me is like, would I buy the entire company if I had enough money to buy the whole thing? Right. And that's the way I view any investment is would I want to own the entire thing at this current price? And the current price is the market cap for me, not the stock price, just to be sort of like clear. So if I would want to own a particular company at, let's say, $1 billion market cap or $20 billion market cap, as in Rivian, or a $50 billion market cap or whatever. And if the stock price goes down, then the answer is even higher, that like I would want to own more of this company, as opposed to, no, I want to get out, like I'm done. So stop loss to me has never made sense from an investment standpoint. If I'm buying a stock, it's because I think the value is good, and I'm not buying because of hype, and therefore, if the stock price goes down, I'm often buying even more of the shares, as opposed to, putting a stop loss where you exit the position. That just has never been a tool I've ever used in investing.
Yeah.
Does that make sense?
Yeah, that makes perfect sense.
Yeah.
That's typically what I do for like majority of the investments. Well, at the moment, all the investments in my portfolio. I'm investing for the long term. If it goes down, I'm more likely to buy more than to exit. But I will say I do use stop losses very, very occasionally, where like maybe once a year, I'll identify an opportunity, like a short-term opportunity, where I'll put a lot of money in that I don't want to keep in, and I don't want to risk all of that money. So
Okay.
I will put a stop loss to a level that I'm willing to lose. Um,
Okay.
so like an example is I did that for AMC back during the GameStop mania,
Mm,
and it was before AMC really ran up. I put a lot of money in that was way too risky, so I had to offset the risk by doing a stop
with a
loss.
stop loss. Okay.
Um, yeah, just to have like a safety net. Because if AMC went the other way, it would have been terrible.
So the stop loss was used for a speculative type of investment, essentially.
Correct.
It,
Speculative
it,
and short for me.
right.
Like I'm
Right.
not staying in that for long, and by long I mean
It-
for a month.
yeah, and I guess the way what you did there with AMC could be considered more gambling as opposed to investing. Would you agree with that?
Yeah,
Okay. Yeah.
yeah.
So,
Yeah.
stop loss
It's
might
definitely
make
not investing.
yeah, stop loss might make a lot more sense if you are gambling or using technical analysis, or other factors that then, like, oh, this is a great company and this is a really good price.
Right.
Then stop loss doesn't make sense, which is the only way I invest. So
Right.
yeah.
Okay. Let's move on to listener questions. And if you have any listener questions, feel free to message us now.
Hey
Adrian,
guys,
what do we have?
Hi, Adrian.
Hey.
we have someone else. I think we talked about Rocket Lab, but I just want to confirm that this person gets their question answered.
Let's do it.
Says, what do you say about Rocket Lab if someone wants to get in?
Yeah, that's a great question, because I love this company, but I cannot say that this company is cheap at current prices. And if someone is just learning about Rocket Lab and they're like, "Wait, I want to invest in this company," the question is, what do I say to them? And the answer is, I don't know what the answer is, right? Um, it's it's very hard to justify a company whose stock price is what is the current price to sales ratio on Rocket Lab? Let's see here. The current price to sales ratio is 84. That means it's trading at 84 times the its current revenues, and that is an incredibly expensive company. Now, the only way that kind of price to sales ratio can be justified is if you have extremely fast growth, such as like 50% annualized growth, which Rocket Lab does seem to have, and you can extend and expect to have that growth for at least the next several, 5+ years. So if you extrapolate that and say, well, Rocket Lab, if it continues to have 50% annualized growth for the next 5 years or 10 years, will it have revenues that can support a price that is double or triple or quadruple what it is today? Then the answer to that is yes, right? But if you say in the next year, will there be an opportunity to buy Rocket Lab at a much lower price? maybe, because the price currently is very, very expensive, and there might be major corrections that happen. I mean, from day to day, the price can fluctuate as much as 10%. So absolutely, there might be opportunities to buy it at a much lower price. It's hard to say, though. Sometimes it just goes up and never looks back, or it doesn't drop to a particular previous price that you might be interested at. So I don't have good advice for you from a Rocket Lab.
We don't have any advice for you. We can
Yeah,
only
no,
talk
but
about
just you know, like I don't even know what I would tell myself if I was if I was looking at it,
right.
today.
Well, so the way I think about it is we're both actively invested in Rocket Lab right now. And it's I
Yeah,
think for both of us are the largest position in regards to like stock that we own. So at some level, we're comfortable with the current price and believe there is room for growth.
that's right. That is absolutely correct. Yeah,
With that said, if I was putting myself in the shoes of I don't own Rocket Lab today, would I start building a position? The answer would probably be no, and that's for me. Just again, I'm not comfortable when a stock is towards its all-time highs. I had a user reach out to me, a user, a I guess follower, subscriber, a subscriber reach out to me on my portfolio like 2 months ago asking me the same question about Rocket Lab. And at the time, Rocket Lab was down 46% from its all-time high. The price was around $40. At that point, if I was a new investor, I'd be comfortable getting into Rocket
buying
Lab. I
in.
thought it was
Yeah,
like sufficiently had a sufficient pullback. But now being back to its all-time highs, I'm not saying it's a bad time to buy by any means. We don't know,
right.
but for the way I invest, I would just watch it.
Yeah. Yeah. So that's a great clarification on all of that as well, because I also is my largest current investment. So the way to think of it is that if I thought if it was overvalued in such a significant way, why aren't I just exiting the position? Well, the answer is that I don't think it's overvalued if you go far enough into the future, right? 5+ years. But in the next 5 years, there might be a lot of turmoil,
Right.
or at least in the next year, there might be a lot of turmoil.
And I will say, I don't know if you feel this way, but so since doing the podcast, I've been getting more comments in my community on Savvy
Yeah.
Trader. And I love it because it's basically people testing me on like my positions and
Your
reasoning. And it
own
really,
thesis. Yeah.
yeah, it makes me really think through everything. It's like, it's
Yeah.
great.
Yeah. I love it. It's been the
Yeah.
case since I started sharing my portfolio almost 4 years ago now, which is kind of crazy. We've been at
That's
this for almost 4
awesome.
years. But all right, what else we have, Adrian?
Let's move on to Rivian.
Okay.
We kind of there's a couple questions on Rivian. So the first is, this is from the same user. Suggest any low or medium cap stocks like Rivian.
Other stocks besides Rivian? I mean, I don't have any suggestions there because if I really loved another stock, it'd already be in my portfolio.
Well, you have one stock that is a lower market cap than Rivian.
Bumble, is that what you
Yeah.
mean?
Yeah.
Yeah. But I wouldn't say that that's that's way below. It's like $400 million market cap or something. It's
Yeah. 400
extremely low.
million versus 20 billion.
20 billion. Yeah. But yeah, no, if it's not in my portfolio, it's not a stock that I'm super excited about. So
Yeah.
let's go on to the next.
The
Sorry,
only
go
stock that
ahead.
I own that's close in regards to market cap is Iren, which is a $17.6 billion market cap. And they're AI cloud / Bitcoin mining company.
Okay, very cool. We can't say the B word, remember?
Oh, yeah. Sometimes YouTube doesn't like that.
Videos.
Yeah.
Yeah, we might have to bleep that out. Anyway, let's go on, Adrian, to the next question.
Okay. So Lemonade announced a 50% insurance rate cut for Tesla drivers when full self-driving is active. citing data that shows materially fewer accidents. Should this affect the Rivian stock?
I don't see why that would affect Rivian stock at all. Full self-driving is a wonderful technology that Tesla currently has, Tesla vehicles. I drive a Tesla, so I use FSD every single day. In fact, it now tells you the percentage of your miles driven that you drive on FSD. And for me, that percent is over 96% of my miles driven is on FSD, which is pretty incredible. It's just, it's wonderful. It's wonderful. Rivian plans to have full self-driving capabilities, and they might have it in as early as late this year in their R2 product and possibly even the R1 product as well. So no, I think this is just a good thing, and both Tesla and Rivian are ahead of the curve on this type of technology, especially relative to traditional car makers.
I think the unfortunate truth of when this will matter is not that you're saving 50% by using FSD, but that insurance is going to be crazy expensive if you're not using FSD. And that's going to be
Right.
a long ways away. But I think that's when it's really going to matter.
Yeah. Yeah.
We ready to move on?
Let's do it.
Okay. Hey guys, what do you think? The Micron stock price is currently about $45 higher than analyst estimated 1-year price.
Well, it depends which analyst rating you're going off of, and let's look it up actually. So let's do Micron analysts, and if we look at the latest price ratings, so we have TD Cowen, who just raised their target from $300 a share to $450. So until what, 2 days ago, their price target was 300, and they just raised it by 50%. So analysts will make changes in the rear view mirror. But here's an analyst that expects $500 price target. Another one that just raised it by $50 to $385. Another one, Wells Fargo, raised it on the 15th of this month from 335 to 410. So these raises usually happen after the stock has come up as opposed to before, which is just how analysts kind of work. And this is also part of the reason why I don't put a lot of weight into anything that analysts say or try to predict, because I think my sort of one-liner on analysts is that they are fantastic at predicting the past. They're not as good as predicting the future. So
It's funny.
that tends to be a lot. The future tends to be predicted by people who are sort of in the industry a lot better than analysts, surprisingly. And that doesn't mean there aren't exceptions, or sometimes it does happen where Kathy Woods and I were on the same page in 2019. But then over the past few years, she's like gone way beyond where I have been in terms of expectations of Tesla stock hitting $10,000 a share and so on. So I no longer see in line with her, but I thought that she was a great analyst in 2019, and then I thought she was a terrible analyst starting 2021, and that's been somewhat the case. But what else we have, Adrian?
Okay, let's do
one or two more.
Yeah, I think this will be our last question.
Okay.
So this person wants to know, what would you start building positions in if you had $10,000 getting started right now?
Yeah, this is another one of those sort of investment advice type of questions where I can't really answer this, but it's nice to already be in a bunch of or a handful of things. You can kind of see which stocks I'm currently purchasing, and you can almost assume that of the other stocks that I own, if I didn't already own them, I would probably be purchasing them, maybe not in as much of a quantity as I currently own, like Rocket Lab or Robinhood, where I'm on the trimming side of them as opposed to adding more. But I think all of the companies that are in my portfolio are fantastic companies. So I'm not sure how I would divide it up. Maybe the way it's divided up right now is the sort of like ideal way. At any time in its history, if you look at its performance history, let's say I had taken $10,000 and put it in at a given point on the graph, you can kind of see how much it may have gone down after such an investment, but then you can also see where it would have gone up to as of today, right? So,
and you could check out Hamid's portfolio, my portfolio, in the link below in the description.
So it's hard to say.
Yeah, I mean, the three kind of ways I initially think about it is, assuming you're basing it off of your current portfolio, which makes sense, is you could either match the current allocations with a $10,000 portfolio. You could either do an equal weight distribution between all the holdings, or you start with the $10,000 in cash, and then as you think there are opportunities that make sense to buy in, you just buy at the individual stock level. Which one is the right way to do it? Well, I don't even think there is a right way to do it. I don't know, but those are the three ways I would think about it.
Yeah. That's actually a great way to think about it as well. One interesting comment that I'll make is that if, for example, someone was looking at my portfolio a year ago and they decided to only buy the things that I'm buying, right, from a year ago to today, their performance wouldn't have been nearly as good as if they had replicated the entire portfolio, because most of the upside came from Rocket Lab, which I wasn't buying in the past year. Or I did occasionally when the stock price, actually in April of last year, when the price went down significantly, I did. But then I had so much of it already, so they wouldn't have benefited from as large of an investment in Rocket Lab or as large of an investment in Robinhood, which have been two of the big drivers in the performance of the portfolio. So it's definitely interesting. Just doing the new ads would not necessarily mean that you're going to outpace the performance of the portfolio. You might, but it might also not be as good. So, all right, we'll end it there. Thank you very much. Thanks, Adrian. Thanks to our listeners. Appreciate it.
I have to go drive away in my new Rivian. For the listeners,
not remote controlled or anything.
Holding up. No, it's not.
No,
it's not remote.
Very disappointed.
You're the only one who's disappointed. I'm very happy with this purchase.
It only cost. Did you buy it for yourself?
I bought it for me. It only cost like 8 shares of Rivian to buy it.
Did it cost like $160?
No, Rivian's at $16 right now. It costs like 75, and then with tax.
Okay, 8 shares would your math is kind of bad. 8 shares would be $120.
We already established that our math is terrible. We counted the Mag 7 wrong. I'm thinking quick here.
All right, awesome. Well, thanks very much, everyone.